Hi, and welcome. You're listening to the X22 Report. My name is Dave, and this is episode 918A, and today's date is March 14th, 2016, and the title of the episode is Central Banks Are Looking to Extend Debt into More Countries to Hold Off the Collapse. Let's get right into the economic collapse financial news. Now, out in Greece, the corporate media, the central banks, they're trying to make it seem like everything is perfectly fine in Greece, and on the surface, with their illusion, everyone believes it. Oh, everything's fine in Greece. They fixed the problems. But when we look closely at what's really going on in Greece, nothing's been fixed. It's an illusion to make you think that everything is fine. Now, the corporate media, the central banks, they're out there saying that Greece's four big banks, they're in the best shape that they've ever been in. But beneath all of this, cracks remain. Greek banks, they're still losing money. The country's second largest lender reported a net loss of 1.9 billion euros in 2015. Fully 40% of the loans and 55% of the mortgages are not being paid down. Big losses on non-performing loans and debt securities will most likely erode the bank's capital once again. Even if the crisis is averted, Greek banks, they're in no shape to make any type of new loans. Remember, cash machines in Athens, they still have a withdrawal limit. You can only take out 420 euros a week. The situation in Greece is dire. It's been covered up with the illusionary propaganda of the corporate media, the central banks, making everyone think, oh, because they stepped in, they loaned the country more money, more currency, that everything is fine. But the people are still suffering. The people don't have work. Unemployment is extremely high. Businesses are going out of business. And the banks, they're crumbling apart. So nothing's changed there. Now remember, the central bankers, they need to get into more countries to spread more debt. Look what they did to Ukraine. The IMF, the United States government, central bankers, the World Bank, all went into Ukraine, loan money, loan money, loan money. They're in a huge amount of debt. The currency is collapsing. The people are suffering. They're in civil war. And the IMF, the central bankers, they need to continually push debt out as far as they possibly can to keep this system propped up. If they cannot do this, the system collapses. And they're working as fast as they possibly can to do this. Now, we know they want a regime change in Venezuela. We know that the sanctions for Cuba have been lifted, at least some of them. And we realize that a lot of these countries, they would love to start spreading the debt throughout the countries. Now, Cuba, they were one of the founding members of the IMF until it quit in 1964. Well, we all know what happened back then. But the IMF right now, they would love to get back into Cuba and to put the country into debt, to spread more debt. Now they're hoping that Cuba will make a formal request for membership into the IMF. They haven't done this yet, but the IMF is looking to approach them in joining up with the IMF. And remember, without doing this, because the product of the central bank is debt, that's all they have is debt. Put the countries into debt and rob the country of the natural resources. Sell them off for pennies on the dollar. That's what they've done in Greece, in Cyprus, in France, in Portugal. All these countries are in debt. Some are a little bit further into debt than others. And it's getting worse as it spreads all throughout the private Western central bank countries. Now, here in the United States, we realize, and we discussed this over the weekend, that the American people, They are tapped out at this point. We understand the government is trying to convince us that unemployment is at 4.9%, but we realize that this number is completely manipulated, massaged, and it's not the real number for unemployment. Real unemployment, depending on which source you go to, is anywhere from 25 to 30%. Because remember, those people who are being laid off right now, who can't find work, who've been looking for 4 weeks, sending out resumes, those people are counted. Anyone beyond that, they don't count them anymore. They feel, oh, they're not really interested in getting a job. And many people are finding it very difficult to find that same high-paying job. So they have to take on 1, 2, 3 part-time jobs. But what's very interesting, and we talked about the corporate income tax to the government, where that is telling us the story that unemployment is not where the government says it is. Well, we're starting to see that the federal income and employment tax withholdings, the broadest and most timely read on the health of the job market, it has been sinking very quickly. The IRS and Treasury data shows refunds tracking 2 to 3% below last year's levels. So we have the corporate taxes for the employees, those are dropping, and the refunds, they're dropping 2 to 3%. This is not good news for companies that focus on low-end consumers who depend on their tax returns to go spend them in retail. So this is a major problem. Remember Walmart, where they're saying, oh, we're just waiting for the tax season because they're going to come in with their refunds and they're going to spend a lot more, and the people never showed up. And sales in Walmart dropped. Revenue in Walmart dropped. And we're seeing this throughout all these different stores where retail is contracting. And what we see right now is that the growth rate of individual tax receipts is showing signs of a major slowdown. Now, this goes back to 2015. And this tells us that something is going on. Well, we kind of know what's going on. We know that people aren't employed. We know people are just making ends meet. And what we see right now is the types of jobs the U.S. economy has been creating over the last year are lower paying than average. Lower marginal incomes lead to lower tax refunds. And eventually, this trend finds its way into the tax data. This also tells us that the true pace of job growth has been slowing. And it also tells us that people cannot find jobs. You need a job to get a refund. And we see at this point, from all the other data that we've been looking at, where we see credit cards in the trillions of dollars, where people have spent more on their credit cards in 2015 than in 2009, 2010, and 2011 combined. This tells us that people are depending on their credit cards. Because remember, when you lose that job and you're on unemployment, or your unemployment runs out and you only can get a part-time job, or you have 2 part-time jobs, which doesn't equal a full-time salary, you depend on your credit cards to make it by. Because in your head, and what the corporate media and the government continually tells us, is that unemployment's at 4.9%. Don't worry, you'll be getting a job. And those people that are putting out resumes are saying, where are the jobs? So all these pieces are starting to fit together right now, and it's showing us that this economy is completely fake, phony, and false. It is a complete illusion. Now today, we see the stock market, it finished up a little bit in the green, but if we go back a couple of weeks, or if we go back to January of 2016, we see the market started off in a downward trajectory, and now it's bouncing around on top. We've seen this before back in 2008, before the whole thing came crashing down. Actually, in 1929, in 2001, it is the same exact scenario. And we also see at this point that for a couple days in a row, gold has been pushed down quite a bit. This tells us something, because gold was inching up. It reached a certain point, and the central bankers, those elite, they don't want gold moving up, so they need to continually push it down. But if you notice, they can't push it down to the levels where it once was. So today, it's still over the $1,200 mark, and most likely, gold will start shooting up once again, and it'll make it more and more difficult to push down. This is a sign where it's showing us that they're losing control. Now, if we reach 1,300 or 1,300 plus, and they can only push it down to 1,300, we are on our way where they are completely losing control, and gold is trying to break out and push out. And what's very interesting is that physical gold demand is very strong in emerging markets. It's not very strong here in the United States, except those people that are awake. Rest of the people are like, gold, why would I want that? I have paper. And we're seeing that consumers in other countries, they are just getting physical gold hand over fist. They just want it. Because what's happening is their currencies in the emerging markets have fallen sharply in the last 12 to 18 months against the US dollar, prompting consumers in these markets to buy physical gold. And once gold starts shooting up here, people will not be able to get it. This should give you a signal, and if you're not still sure, wait a couple weeks, see where gold goes. If we make it over 1,300 and they can only push it down to 1,290 or right at 1,300, we can see we're on our way. And personally, I would not wait any time past this. I mean, if you're unsure, watch it, look at it, but I wouldn't wait too long. I would make sure that you're purchasing either silver or gold. You don't have to purchase an ounce of gold. You can purchase 1/10 of an ounce, slowly but surely, but I would start doing it at this point. I've been doing it month after month after month, nonstop. I don't really care what the price is. Now, do I buy an ounce? No, I don't have the funds to do that. So I buy 1/10 of an ounce, 1/4 of an ounce, whatever I can muster up, or if I don't have enough for gold that time, I buy silver. And I know there's many people out there that are hurting right now that don't have the funds to purchase any type of precious metal. Get copper. See if you can get some junk silver, which is a little bit cheaper, where you can still, get it. But whatever you're doing, I would start now. If you're unsure, take the time, watch it, see where it's headed, and then make your move. Now, Friday, the Department of Health and Human Services released the 2015 end-of-the-year exchange enrollment data for Obamacare. And guess what? They did it very quietly on Friday because they didn't want anyone to realize what's really going on with Obamacare. Obamacare is a complete disaster. Enrollments right now in Obamacare have dropped 1.1 million in the last half of 2015. There were a large decline in exchange enrollments. Final numbers were downgraded. And we see what's happening here is at the end of the open enrollment on February 15, 2015, 11.67 million people had selected an exchange plan, but by the end of the year, only 8.78 million people were enrolled in the plan. 25% declined. Why? Because they saw how much it was, and they decided, you know what, we just can't pay for it. A lot of the exchanges, almost half of them, have gone out of business. And a lot of people say that the health insurance does not benefit them with the high deductibles, the high premiums, which they can't meet with their families. It doesn't make sense to pay all this money and then pay to go to the doctor. They rather just pay the penalty, or maybe some people aren't even paying the penalty. They just rather pay for the doctor's visit. That's it. The other thing is, there were about 500,000 people that were removed from the entire healthcare system because there was no way to verify that they were eligible. So this entire healthcare plan is a complete joke. It's not working. It's not a benefit to the people. And it is collapsing right in front of our eyes. Listen, everyone, thanks a lot for listening. Be well, be safe, and especially be prepared. Thanks a lot.